Earnings Update Note Template. Professional English in 20 minutes. Welcome! In this micro lesson, you'll learn to write fast, clear earnings updates that busy investors can scan in seconds. Your audience is fund managers who care about what moved the quarter and what it means next. They want objective, concise, data-led writing. No fluff, no guessing. We'll show you how to compress a full call and release into a tight snapshot: headline, company context, key drivers, outlook, and risks. By the end, you'll have a repeatable approach to publish within minutes, add value to models, and sound crisp under pressure. Use a simple template to stay fast and consistent. Start with a headline summary in one sentence that tells the result and why it happened. Add a company context line to remind readers what the firm does and its scale. Then list 3 to 5 drivers of results: revenue mix, margins, and one standout data point. Close with outlook, risks, and action, management guidance, your model tweaks, catalysts, and watch points. This structure answers the only questions busy readers have: what happened, why, and what changes now. Lead with a result plus magnitude plus driver. Example: Q2 EPS up 12% on 8% revenue growth from pricing. FX -2 PTS. Include the time period, Q2, FY, and FX impact when material. Avoid adjectives like strong or solid. Let numbers do the talking. Good. Guide raised. FY revenue plus 2 to 3%. EBIT margin plus 50 bits per second on cost saves. Weak. Beat expectations on strong demand. Your headline should stand alone, letting a portfolio manager decide in 5 seconds whether to read on. Give one line that orients the reader. In 12 to 18 words, say what the company does, where, and its edge. Add one scale metric. Example: global HVAC maker with service-led moat in North America. Number 2 share. FY24 revenue $14 billion. Or APAC online marketplace focused on cross-border sellers. Take rate rising. GMV $9B. This line prevents confusion when a manager covers dozens of tickers and sets up why certain drivers matter: pricing power, mix, or geographic exposure. Break results into crisp bullets. 1. Revenue/volume/price mix, e.g., revenue plus 9%, volume minus 2%, price plus 7%, mix plus 4%. 2. Margins. Note gross, EBIT, and EPS bridges, e.g., gross plus 120 bits per second, pricing greater than input. EBIT plus 60 bits per second, OPEX minus 30 bits per second, EPS plus 15% in costs. Buybacks. 3. Chart-worthy data point. Surface 1 standout, like cloud ARR plus 32% YY. Net retention 118%. 4. V is guidance/consensus. Beat EPS by 6%. Revenue in line. Guide raised 2%. Keep numbers comparable. Currency, constant FX, and explain the why, not just the what. Quote management numbers, not hype. Example: FY revenue plus 5 to 7%. EBIT margin 11 to 11.5%. Tax approximately 22%. FCF $1.2B. Then state your model updates briefly. Raise FY EPS plus 3% on higher pricing. Modestly lower volume. Flag catalysts that could move estimates. New product launches, regulatory approvals, capacity ramps, macro shifts, rates, FX, commodity costs. End with a clear read-through. Back half weighted on cost saves. Watch order momentum and lead times. Keep it specific, measurable, and time-bound. List what could derail the thesis. Execution, integration, product delays, Salesforce ramp. Competition, pricing pressure. New entrants, share losses by region or segment. Supply chain, component shortages, logistics costs, FX volatility. Balance sheet and cash flow. Leverage, interest expense. Working capital swing, quality of FCF, one-offs versus recurring. Disclosure gaps or anomalies. Changing KPI definitions. Non-GAAP add-backs. Mismatched cohort metrics. Convert risks into actions. Track churn monthly. Watch backlog to bill. Compare price realization to input costs. Use precise verbs. Beat/miss/inline. Expand comparisons as Y and Q. Prefer active voice and short sentences. Lead with units and round numbers. Revenue $3.2 billion, plus 8% YY. EBIT margin 10.4%, plus 60 bits per second. Cite sources concisely. Company release, call, model. Avoid superlatives and marketing claims. Keep one idea per sentence. Put deltas before reasons. GM minus 80 bits per second on mix. Keep tense consistent. Past for results, future for guidance. Aim for scannable lines that a PM can absorb between meetings.